Hello friends, you are watching Tax Dosti videos and we are discussing Sindh High Court decision regarding section 7E. We were in our previous video discussing in part 13, we were discussing paragraph 13, and the Sindh High Court judge has relied on a Indian Supreme Court decision, and we read its paragraph 13. Now it's paragraph 14, we're starting from that, and this you are watching part 14, and we'll be reading the paragraph 14 of this judgment. So far the judge is not convinced by the petitioners that this section 7E, tax on deemed income, is an invalid law, and he has explained that neither is it discriminatory, neither is it confiscatory, neither is it presently we're discussing the legislation of the competence of the federal legislature. So paragraph 14 of the Indian Supreme Court judgment says that even in its ordinary economic sense, the expression income includes not merely what is received or what comes in by exploiting the use of a property, but also what one saves by using it on oneself. Meaning that income is not only what you earn, जो पैसे आपको आते हैं, not only what you earn or gain by selling for example, if you have a house, you can give it on rent and you can actually receive a rent when someone else lives in that house. Another type of income is capital gains, that when you sell that house. Another type of income which the Indian Supreme High Court in its case has identified is the money that you save. For example, if you have your own home, you have saved rental income, which rental expense, rent, which you would have had to paid if you didn't have your own home. So even that is income, and that is the basis of this logic, that since a person is having a file, a plot, a house, a commercial plaza, or any property, he is saving on the expense that he would have bared if he did not have. For example, in the detail of this Supreme Court case, they discussed that suppose if you had a wedding and your guest came, you would have paid hotel charges if you didn't have extra houses. So since you have more than one house, you can give your guest that house to stay, and if they stay for a month, you have saved a month's worth of hotel expenses. So basically that is also income according to the Constitution of India and according to the Constitution of Pakistan. That which can be converted into income can be reasonably regarded as giving rise to income. So every sentence of this Supreme Court judgment is important. The tax levied under the Indian Act, is on income, though computed in an artificial way from house property in the above sense, and not on house property. From house property, not on house property. These are also important grammatical words. उर्दू में अगर हम कहें तो उसे कहेंगे कि घर से आने वाली इनकम घर की इनकम नहीं, मतलब घर की इनकम, बल्कि इस तरह कहेंगे कि घर की इनकम यानी कि घर को रेंट पर देने से, ना कि घर को बेचने से जो इनकम है वो. Entry 49 of list 2 of 7 schedule to the Constitution is not therefore attracted. The levy in question squarely falls under entry 82 of list of 1. Now entry number 82 is like our entry 49 of Pakistani Constitution, the entry 82 of the Indian Constitution. So the Sindh High Court judge in civil petition number 4614 of 2022 has used this logic, and in paragraph 14 he writes, insofar as concept of deemed income under our tax laws is concerned, it would be of relevance to note that is what introduced through insertion of section 80C, 80D and 80DD in the Income Tax Ordinance 1979. The section 80D is now section 113 in Income Tax Ordinance 2001, which was section 80D in income tax, in the previous income tax law of Pakistan. We are back to Pakistani laws, so no need to be confused. So now the judge is saying that deemed income concept has been introduced in Pakistani law, which was impugned by the taxpayers in the high courts of the country, and eventually it was decided by the Honorable Supreme Court in the case of Ilahi Cotton. As a matter of fact, the levy was sustained by the High Court of Sindh as well as learned Lahore High Courts, and thereafter in appeal it was also upheld by the Honorable Supreme Court. So this is the legislative history of sections 80C, 80D, and in those sections, income, rather than taxing the profits of business, the sales of business in case of 80D, and in case of 80C it was tax on the value of import of items. So at the import stage tax was levied, at the sales stage the income tax was levied, and all of these were upheld by different high courts and then eventually by Supreme Court in the famous Ilahi Cotton Mills case 1997. So this section 7E can have a similar legislative history, since now we are reading and going through the Sindh High Court decision. Soon we will be reading the Lahore High Court decision, which is under litigation right now, and after some time, maybe next year, we'll be reading the Supreme Court decision on whether section 7E is constitutional, that is valid law, and that tax is right. I would suggest that it is better to pay your taxes under section 7E, and if it goes in favor of the taxpayer, we can get refund. So the judge says that it may also be of relevance to observe that the time and again the judgment in Ilahi Cotton is cited, and in fact in this matter it was relied upon by both sides by referring to various subparagraphs of para 31 and by making an argument in support of their contention. Interesting thing about Ilahi Cotton case is that both sides can, the taxpayer as well as the taxing authority, both can use this case in their favor every time. However, we may say that this is least impressive and does not assist the court in any manner. What has been overlooked by respective counsels is that firstly, what was the proposition of law before the Honorable Supreme Court, and secondly, what has been finally decided therein. The question was that there could be any concept of deemed income when it had not been received in actual. So this was the first question in front of the Supreme Court in case of Ilahi Cotton, whether law can impose tax on deemed income, an income which is not actually received, and where there could be any minimum tax or presumptive tax on income, and whether if there is no income, no actual income, still can the legislature implement tax as minimum tax or as presumptive meaning that considering that this tax which has been levied is full and final. This was in a simple and plain language the gist of the issue involved and nothing beyond it. As to paragraph 31, it may further be observed that the Honorable Supreme Court, after a threadbare examination of the argument, now here paragraph 31 means the paragraph 31 of the judgment of Ilahi Cotton Mills 1997 of Honorable Supreme Court of Pakistan, and here the paragraph 32 of that judgment is being reproduced. But let's see why it's being reproduced. As to para 31, it may further be observed that the Honorable Supreme Court, after a threadbare examination of the arguments and case laws relied upon by the respective parties, enunciated certain principles of law. However, at the same time, while dismissing the appeals, it was observed that they do not support the case of the appellant taxpayer, and ultimately the levy was upheld in the following manner. So this is the judgment, paragraph number 32 of Ilahi Cotton, which has been mentioned at least 5 to 7 times in this judgment, Sindh High Court judgment also. The Honorable Supreme Court judges, 5-member judges, write, we have summarized here in para 31 the reason of decision ratio decide the reason or the logic of the decision of the above discussed case and certain pertinent observation made therefore. A pursual of above subparagraph 1 to 30 of para 31 indicates that the same do not advance the case of the appellant, the petitioners of that time. On the contrary, meaning taxpayers, they reinforce the principle of law that the legislation, particularly in economic activities, enjoys a wide latitude in the matter of selection of persons, subject matter, events, etc. for taxation. The presumption is in favor of the validity of the legislation. The burden to prove that the same is invalid is on the person who alleges it. Meaning that even in this case, Section 7E, or in similar cases which are going on with regard to capital value tax CVT imposed by Finance Act 2022 through Section 8, or which is capital value tax on residents on their foreign assets, or for that matter the super tax that has been imposed under Section 4C, have all of these in these cases, and even in a Lahi Cotton case, the petitioners, that is taxpayers, have to prove that this law is invalid, and the federation does not have to prove because they have already made the law. However, one can argue that general observation contained in some paragraph 31 to 36 of para 31 lends support to some extent to appellant's case. However, it should not be overlooked that in none of the cases from the judgment for which the above observation have been lifted, the question as to whether there can be presumptive tax or minimum tax in view of entry 47 or 52 of legislative list was in issue. In this view of the matter, it would be inappropriate to apply the test traditionally prescribed by Income Tax Act and or any other statute. The Indian Supreme Court, in 3 cases falling in the first category mentioned in paragraph 25(1), hereby upheld the levy of tax on expenditure. So the legislation, the federal legislation, can even levy tax on expenditure, just as we have tax on mobile expenditure. Whenever you load your mobile, charge your mobile with balance, some part of it is deducted, though it's your expense, but still the government has power to levy tax on bills, electricity, internet, mobile bills, etc. Hotel receipts and luxury, for the reason already discussed here in paragraph 26. In the cases falling in the second category referred to, which consist of 6 cases, the wires of newly added section 44 AC. Now I know that you are getting confused, but if you have read the Lahi Cotton case like me many times, and you are reading this case, and you have also read the Supreme Court cases. Now the Supreme Court of Pakistan has jumped in its judgment of Lahi Cotton to a case of Supreme Court of India, and that's why the section numbers are appearing differently. But don't worry, the matter is being discussed, the power, legislative competence of the federation, that is the government and the parliament, to levy tax. The matter eventually was taken up by the Indian Supreme Court in the case of Rao, which been dealt with in detail with reference to contentions of the Lord Counsel for the appellant here and below. The cases falling under the above category do not advance the case of appellant. As regards the case covered by the third category, and which comprise 14 cases mentioned here, it may be stated that learned counsel for the appeal have heavily relied upon 2 cases, namely the case of Mupal Nasir and the case of State of Haryana versus mentioned in respect, which have again dealt with below with reference to submission made by learned counsel. The remaining cases. Okay. So in this case, and I will read forward, the Indian Supreme Court has divided different petitioners into different cases so that exact judgment can be given. It may further be stated that 3 cases of Privy Council referred herein, paragraph also referred in 42, need to no further discussion. However, in one of the above 3, namely the above observation, are to be viewed with reference to above context in which they are, namely the legislative power interstate between dominion and the province. So basically, the power between the states and the federation is being discussed, And here the judgment will read the last paragraph 34 so that you don't go to sleep. Keeping in view above case law and the treaties and the aforesaid legal inferences drawn therefrom, I would encourage you to download this case from your WhatsApp group or from Sindh High Court website, and please go through it, make notes of it. You will learn a lot. These are very important cases. They teach you the fundamentals of income tax law of not only of India, Pakistan, but of other jurisdictions also. We may now revert to the question of vires of impute section. It may again be observed that powers to levy tax is a sine qua non for a state. In fact, it is an attribute of the sovereignty of a state. Every free state can implement tax. It is mandatory requirement of a state as it generates financial resources which are needed for running a state and for achieving the cherished goal, namely to establish a welfare state. For welfare state, taxation is important. In this view of the matter, the legislature enjoys plenary power to impose taxes within the framework of the constitution. So, the legislature, in our case Parliament, Senate and National Assembly together, can impose taxes keeping in mind framework of the constitution. It has prima facie power to tax whom it chooses, power to exempt whom it chooses, power to impose such conditions as to the liability or as to exemption as it chooses, so long as they do not exceed the mandate of the constitution. It is also apparent that the entries in legislative list of the constitution are not powers of legislation but only fields of legislative heads, meaning that these they do not define the powers, but they only define the scope of the powers of. Within that scope, it has a lot of choice to tax different people. Now, the allocation of a subject to the list in not by way of scientific, let me repeat it, it is also apparent that the entries in the legislative list of the constitution are not powers of legislation but only fields of legislative power heads. The allocation of subjects meaning taxpayers or people on whom the law or the tax will be applicable to the list is not by way of scientific or logical definition but by way of mere simple enumeration of broad categories. A single tax may derive its sanction from one or more entries, and many taxes may emanate from one single entry. It is needless to reiterate that it is a well settled proposition of law that an entry in legislative list must be given a very wide and liberal interpretation. The word income is susceptible as to include not only what is in ordinary parlance it conveys or it is understood, but what is deemed to have arisen or accrued. Meaning, income is a word which can be used widely, and something which is an expenditure for you or an investment for you or maybe a saving or an asset for you may be considered income according to law as long as it is within the constitution. It also manifests that income tax is not only levied in the conventional manner by working out the net income after adjusting admissible expenses and other items, but the same may also be levied on the basis of gross receipts expenditure. Meaning, tax can be collected with reference not only to net profit but your gross sales, your investment, your expenditure. There are new species of income tax, namely presumptive tax and minimum tax. So this Indian Supreme Court judgment gave rise to the concept of presumptive tax and minimum tax, and these have been well incorporated into the Income Tax Ordinance 2001. You are watching part 14. Let's meet in part 15. Thank you.